Welcome back to another weekly forecasting video where we go through the Forex markets and some of the other pairs that I look at just to give some sort of directional bias on what I'm actually looking for. So, week on week I break down what I see, what I'm thinking, just to sort of keep track of it myself and to also aid some bias for you guys, because I think, you could learn something from these videos. So, jumping in and starting off on the monthly dollar index, as we use this as a measuring stick for all of our trading ideas. The dollar is mainly what drives the Forex market, at least for what I look at, and I judge my analysis based off of this. Now, before we get too deep into the analysis, I am a little bit ill at the minute, so please bear with me, if I sound sort of, a bit different than usual. So anyway, jumping on to the monthly chart, there's something I wanted to point out right here. So as we can see, we can mark out AMD. We could see this accumulation right here, manipulation to the upside, fully closed this fair value gap right here. And then we had a displacement leg lower. So we could see this range really, really nice, some nice volatility within the market, dropping down. And then we've come back into a tighter consolidation than this actually, even though this was up and down. So this is on a monthly time frame. So this does date back to 2023. I'm not pointing out this as a trading idea, but I'm just showing that fractal aspect of the market where, AMD happens on every single time frame. You can mark it out and you can analyze it and see things for yourself. And it's always good to sort of get some practice in seeing these things. AMD, accumulation, manipulation, closes fair value gap, distribution lower. And this is where that real volatility was. And this is where most of the year was actually in shorts for the dollar index. At some point we might see a return to this fair value gap right here. If we mark this high to low, that is actually just resting below equilibrium, so I reckon we could return to that in the future as a long-term target. Now, dropping down the time frames, we've marked out, if you see right here, this monthly low and this monthly high, and we failed to close above either of them, which is telltale signs of consolidation. We're taking highs and lows and we're failing to close above significant pools of liquidity. So dropping down the time frames, we can see those two things that we've just marked out, run on the low, run on the high, and then coming back towards the range. And we can tell this if we can just mark it high to low. We're just chopping around this very, very low volume candles. Anything that's just sort of wicky and volatile, taking highs and lows both sides, we don't really want to position in, because this is just going to be a consolidation on a lower time frame. If we drop down to the 4 hour, just to show you what I mean, I always like to add the visual aspects to this. We can see this is just sideways price action all throughout here. We're not taking highs, we're barely taking lows, coming back up, and we just hit that low as the target, and then we just chop about. I mean, yes, you could frame the idea of running external range liquidity and then displacement higher, and that is valid. But once we start to take out external range and we don't push past that, and we just fall back in within the range, taking lows, not respecting much. We've got a daily chart, might be a bit more clearer. This was a nice run within there. This had narrative and framework around it. This was a bit choppy, but we had the interest rate cut from the fundamental. So on one side of the move, we had the fundamental analysis that held this trade. On the other side, we had the technical analysis of the run-on stops, displacement, market structure shift, and then OT optimal trade entries back towards this external range high. Now, I've said this for a few weeks now, with the time of the year that we are in December. Currently, I'm recording this on the 13th of December. We are back within the range, disrespecting lows again. So, with it, when I'm looking at this, and I expect low volatility anyway, I am just positioning myself for next year, really. I don't want to get too involved with framing ideas and struggling. We have had a return to this volume imbalance right here. The lack of any body or wick, we had this run higher, tagged that, and then displacement lower. So I guess the only thing from a technical aspect would be shorts. If you were framing it from high to low here, potentially that could be an optimal trade entry. But you've got to think and time. You've got to pair time and price, as ICT Concepts always says. And even though this is the price element, the time aspect isn't there, because if you think, right, we've got to get up to a premium in order to short. So let's say we were looking for optimal trade entry. Okay, let's mark this out. Okay, we've put the optimal trade entry on. Okay, so these are daily candles, and I use the daily as either for intraday bias or for swing trades. So, whether you're an intraday trader or a swing trader, it doesn't really matter. You've got to wait for a predictable price within the market. So you come back up to this area and then you get there. So this takes a couple of days, maybe 4 or 5 days, with the volume that we've been having. We're then on like the 19th or the 20th of December, and everyone's shut, and there's a lack of liquidity within the market. Are we going to, let's get the path tool out, sort of chop up here, wait for that reaction, and then look for a trade and expect it to be expansive before Christmas? I personally don't think we will, just because of December and January being low liquidity, which is the reason why even if we got up to this area, I wouldn't be looking for this trade, because I don't think the institutional sponsorship would be behind this in order to take it. So I wouldn't look for anything like that. Now, that's just my reasoning. You've got to have time and price. Like when we had these moves up here, you swept liquidity, and we're in September, and you've got time. You have got time to, trade back up and get there, and that was the bulk of this move. And that's sort of what I'm framing. So it's a bit boring. I'm saying this for the past couple of weeks now. We had this really exciting run where every single week we had something to mark out and something to look for. But you don't need to win every week. You just need to make sure you're mitigating the losses that you take in unpredictable price action. And I believe this is unpredictable price action for myself now. And it's also having a bit of downtime as well, taking the technical aspect away from it. We've been looking all year for different things, and I've been marking it out for the past couple of months, at least since I started these analysis videos. And we've had good moves and predictable moves will always come. It's just about waiting for those shots and allowing price to come to you in a favourable way. So with saying that, looking at the euro, exact same thing. If anything, we'd frame longs, but this is just purely marking out for a case study. And then same with GBP, they're all inversely correlated. Euro looks stronger, so if anything, I'd pick the euro, as this seems to be more correlated with the dollar index, and that shows that the move will be more consistent, likely. That's traded high, but again, this is pretty low volume and choppy. And all the other pairs follow, really. USD JPY, really choppy. Euro is going a bit higher just because of that institutional order flow entry drill right here. But this is more me marking out stuff and having a look just purely because I am using it as case studies and repetition of just make sure I'm seeing these things. I'm not actually actively looking for anything. I sort of end my year around here anyway. Nothing come in the past week that I looked and thought was favourable. So, although it's boring, there's, that's part of trading. That's what you sign up for, the US bonds had an institutional order flow entry drill. This could be a buy side target. So I expect this to be taken out at some point. So maybe some push higher on the yields. But once we get above that high and this high, we've taken out some significant external ranges. I don't expect there to be much more expansion towards the end of the year. Gold has been one-way price action really since for all the year. So that's basically just been one-way price action due to the things I covered in last weekly commentary about the whole people moving money into gold because of uncertain times and people taking it out of dollar, which is usually a safe haven. I covered it a little bit more last week if you want to go brush up on that. So that's pretty much it. I'm not even going to bother looking at the calendar because there's no news events that will make that I need to be aware of or I'm looking for, because I'm not actively looking for trades. If you could learn something from this. If you're still looking at the charts, then maybe learn something from the fact that I'm not actually looking to trade. I'm just sitting on my hands because I don't need to know where price is going all the time. I just need to find something when it's predictable and trade my model accordingly. So the last thing I wanted to cover, actually talking upon that, is trading and backtesting a model during these times. Just because I'm not looking for something actively does not mean I am not working on anything. The two main things are reviewing the journal from everything this year to see if I can cut out anything that hasn't made sense on a consistent basis, just to refine things. That could be stop loss placement, time of entry, where I entered, and where I took profit and how I trailed. And those are that's the bread and butter of trading. That's the 4 or 5 areas that you want to look for, and you want to make sure you're working to optimize that. Is there anything that you consistently lost at? Did you enter too much in a premium when you had a long bias, or things like that? Can always help refine and aid your bias. And then back testing. You want to keep things fresh in your mind. You don't want to just turn off the charts now and forget about it and come back in end of January, early February, and then just be like, right, all my hard work that I did and worked on this year is now gone. You want to get to a point where you can come back and be like, right, I've been ready for this. I can see this. I know what my model is. FX Replay, I'm not associated or anything with it, but that's personally what I use. I know there's other perfectly fine softwares out there where you can have loads and loads of data of like your average risk to rewards, your ideal risk to rewards, your win rate, how many trades you took a week, how many trades you took in the month. Is there any correlation with on what day you placed a trade on the what day you won? There's so much data and refinement that you can make that it's always worth going through this data and making sure that, do it in a quiet time. Don't do it when your schedule's busy and you're looking for trades and stuff. Do it when you've got a bit of time to optimize things on your own basis. And I think that has always helped me and, prepared me for the year up and coming. And you want to put yourself in a position where the years go by so quick. You don't want to be doing this work in February and brushing up, and then it takes 2 months to get there, and then you're already in April and May, and then you want to be straight on it. You want to be in February looking for price action. Liquidity picks up, and you know what you're looking for, and you know what your model is, and you trade that model accordingly, and you know what markets to look for. So yeah, a bit of a ramble on there, but I think that's more valuable really than the price action at this time. So if you can take something away from this, then please do. But other than that, I think it's pretty much going to be the same thing. I'll still do a video every week just in case to cover anything that comes up. If anyone wants any help with anything or ask any questions, then please do so. I'm always open to answering a comment or a message, so I'm more than happy to help. So thank you very much for watching this video. And with that being said, have a safe week's trading.